The $1 million Orange County house isn't what costs you $1 million. If you're buying a home in Orange County, I've got some bad news. The listing price is not actually the listing price. I mean, technically it is, but it's kind of like buying an airline ticket for, now rest in peace, Spirit, for $79 and then discovering you also need a seat, a bag, oxygen, and the right to blink. Because a lot of buyers look at the house online and think, okay, it's $1 million. I got it. No, 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 no. That's just where the adventure begins. Your monthly payment is usually made up of principal, your loan balance, interest, property taxes, homeowner insurance, sometimes HOA if applicable, and mortgage insurance, which means two homes with the exact same price can have completely different monthly payments. And that's where a lot of people get surprised. So let's talk about the three things every Orange County buyer should understand: loan types, property taxes, and what actually reflects mortgage rates. First, mortgage loans. A lot of people think there's just a mortgage. Like you walk into a bank and ask, oh, one mortgage, please. But there are several different types of loans. The most common is a conventional loan. This is what many buyers use when they have solid credit, stable income, a decent financial profile. Sometimes buyers can put down as little as 3% or 5%. But if you're putting down less than 20%, you'll typically have mortgage insurance, which is basically the lender saying, we like you, but we like you a little more if you had a bigger down payment. Then there's FHA loan. This is popular with many first-time home buyers because it can allow lower down payments, more flexible credit requirements. The trade-off is the mortgage insurance, because apparently nothing in life is free except unsolicited advice from relatives or me. Then we have VA loans. And honestly, these are one of the best mortgage benefits available for eligible veterans, active duty service members, and certain surviving spouses. Qualified buyers may be able to purchase with no down payment and, cha-ching, no monthly mortgage insurance. Whenever I explain VA loans to civilians, they usually stare at me like, wait, that's allowed? Oh, but wait, there's more. Then there are jumbo loans. And in Orange County, jumbo loans show up a lot, because apparently Orange County looked at a normal house price and said, what if we doubled those? And jumbo loan is used when the loan amount exceeds conforming loan limits, like those with conventional financing. These loans often come with stricter requirements and stronger reserve requirements and sometimes larger down payments. Basically, the lender wants a little more reassurance before handing over that much money, which justifiable. And finally, adjustable rate mortgages, or ARMs. An ARM typically starts with a fixed rate for a certain number of years, then adjusts later on. Some buyers like them because the initial rate is often lower. Others hear the word adjustable and immediately develop trust issues. I get it. Neither reaction is completely wrong. The important thing in understanding is how the adjustment works before choosing one. The takeaway is the best loan isn't the same for everyone. A first-time buyer, a veteran, a condo buyer, or someone purchasing a luxury home can all end up with completely different loan options. Now, let's talk about the thing buyers forget exists until they see the payment estimate. Property taxes. In California, property taxes are generally based on the price you pay when you buy the home. Many Orange County buyers estimate around 1.1% to 1.25% of the purchase price annually, depending on the location and any additional assessments. So if you buy $1 million home, for example, your property taxes could easily be roughly $11,000 to $12,000 per year. And yes, that payment gets divided into monthly payments. That is usually the moment when buyers say, wait, every month? And yes, every month, which I always tell people not to focus on only the principal and interest, because principal and interest is looking at a price of a burger and pretending fries don't exist. I mean, just what are we doing? You need to account for taxes, insurance, HOA dues, and possibly mortgage insurance too, depending on the situation. And speaking of HOA dues, Orange County loves an HOA. Some communities have pretty modest HOA's fees, keep them pretty reasonable. Others seem to believe they're running a small country. Depends on who you ask. I've seen buyers compare two homes and assume the cheaper one is the better deal, and then they discover the HOA is several $100s per month. Suddenly, the cheaper home isn't cheaper anymore. So finally, let's talk about mortgage rates. This is probably the most misunderstood part of the mortgage world. Someone always asks, so what's the interest rate today? And the answer is for which buyer? Because rates aren't one size fits all. Your credit score matters, your down payment matters, your debt to income ratio matters, the type of property matters, the loan type matters, whether you're living there or buying it as an investment matters. Basically, lenders are looking at the entire picture, and then there are market factors. Inflation, the bond market, mortgage backed securities, the broader economy. A lot of people think that the Federal Reserve directly sets mortgage rates. Not exactly. The Fed influences the overall interest rate environment, but mortgage rates move based on several different economic factors. That's why rates can change even when the headlines seem confusing. The important thing to understand is this: the rate you see online might not be the rate you get, because the final answer depends on both the market and your financial profile. And this matters even more in Orange County because home prices are higher. A small change in rate can create a surprisingly large difference in monthly payment. And that's why I encourage buyers to stop asking, how much house can I afford, and start asking, what payment monthly am I comfortable with? Because two homes with the same purchase price can have very different monthly costs once taxes, insurance, HOA dues, and financing are factored in. So if you're buying a home in Orange County, remember, the house price is only part of the story. The loan type matters, property taxes matter, HOA dues matter, mortgage rates matter, and understanding the total monthly payment is what helps you make a smart decision that fits your life. If you're thinking about buying and you'd like help figuring out what a realistic monthly payment could look like, feel free to reach out. I would be more than happy to connect you with some trusted lenders, and then we can start your search from there.